I'm Steve Bickerton. I'm the Senior Managing Director and founder of Prostar Capital. Well, COVID-19 has certainly, had a big impact around the world, I think positively and negatively. When we look at our own portfolio, one of the things that has been, quite surprising and pleasing is how well the portfolio stood up. So we invest in the energy midstream. We're seeing, huge amounts of demand for storage across our portfolio. Storage rates are up, revenues are up, inventories are up. So, all of the sort of key drivers of our business. I think the reason storage has held up well in current times is probably two components of that. One is that, regardless of what's going on in the world economy, we do continue to use energy. We still need to generate electricity. We still need to heat our houses, drive air conditioning. What we're seeing at the moment really in the energy midstream space, especially around storage, is really a perfect storm in a positive way, where we have, oversupply combined with, a fall in demand causing, excess inventory. Given current market conditions, what we're seeing now is very, very low commodity prices, and a contango in the market. What we're finding is a large number of customers are looking to lock in contracts, medium to long-term contracts. So given the level of contracting we have, what that means is we have a very defensive portfolio of assets. I think there are other aspects that haven't done quite as well. Probably some of the more, traditional core aspects of infrastructure have suffered, airports, toll roads, suffering really from a scenario that no one really could have foreseen. So it's a very difficult situation for those. But hopefully they will recover quickly as economies start to get back to normal. So obviously one of the questions is how well are natural gas, assets positioned given the current market. Now, what you've got to remember is it's a very diversified market, around, not only through the supply chain, but also around the world. So if we look at, gas distribution, if you like, the demand end, we're seeing, strong demand for natural gas. The key markets we'd expect to see it. People are still generating electricity, they're still heating their homes. All the end use of that product in some ways hasn't changed. What we are seeing is some volatility on the supply side, again, predominantly driven by, a significant fall in the commodity price. So what we're finding is that some of the producers who may not have long-term offtake contracts or who have more commodity price exposure, may be finding it difficult to compete. That may mean that we end up with some stranded assets or assets that are not being utilised to the full extent as that competition in the market plays out. So one of the questions we get asked a lot is what role does traditional energy, sources play in the global energy market on a go-forward basis, especially in the context of renewables and lower carbon emissions. I think it's important to note that when you look at the demand in energy growth or growth in energy demand, over the next 20 to 25 years, the majority of that demand's coming out of Asia Pacific, and that's to do with the industrialization of those markets, the increase in use of electricity, the urbanization, increasing motor vehicles, etc. that's going on. And we see, still see traditional energy as a key component to that. I guess that leaves a question of renewables, and we obviously see a place for them in the supply chain. Now, low commodity prices makes it more difficult for them to compete. They are, by their nature, more expensive, less efficient. But things like solar and wind and other things still have an important part to play in the growth in energy demand. Importantly, we still see that growth coming through, and we see that unchanged from our sort of medium to long term forecasts. Post COVID-19 and post global recovery.